I'm Debi Peverill, and you're listening to the weekly tip from Painless Financial Training Group. What I'm talking about today is the term proper books and records. We talk about this a lot, and the reason for that, of course, is that it is required in the Tax Act that every taxpayer, whether they're an individual, a corporation, a trust, a charity, that they maintain proper books and records, which means that they are able to back up the numbers they put on a tax return. You have receipts that add up to the number that you reported for your revenues and your expenses with whatever tax return you filed. So recently, there was a Tax Court of Canada case, 2019 number 145, which stripped a charity of its ability to issue a donation receipt for a year as a penalty for not being able to back up the numbers that they put on their tax return. The reason they had trouble with it was because it was overseas and they were dealing in an economy that doesn't always give people receipts, kind of a cash thing. And that's an issue for all of us, all taxpayers. The easiest way to prove that you have paid for the expenses that you put on your tax return is to not be using currency to pay for them. If you've got a debit card, an online transfer, a credit card, a check, then there's some proof that you're the one who spent the money. Making sure that you can back up the amounts you're claiming on your tax return is the easiest way to avoid losing the deduction because you can't prove it. So, stop paying cash for business expenses because we all pay enough taxes.